Welcome to our deep dive briefing. Today, we're tracking a set of interlocking crises that are quite literally rewiring the world as we know it. From a military showdown in the Middle East to a massive power grab by big tech, we're going to connect the dots. So let's get right into it.
So let's set the scene. The date is Sunday, April 19th, 2026. And right now, a series of seemingly separate events have converged, bringing the entire global system to a really critical moment.
And nowhere is that pressure more intense than in the Middle East. As one top analyst put it, the entire region is on a hair trigger. A very important diplomatic window has just slammed shut, and the situation is now incredibly volatile. Honestly, the whole world is just watching and waiting to see what happens next.
Okay, let's zero in on that flashpoint. Now, there is a fragile 14-day ceasefire between the US and Iran. Technically, it's still in effect. But on the ground, military forces are digging in, they're hardening their positions. And that ceasefire? It's being tested to its absolute limit by a total shutdown of all commercial shipping in the Persian Gulf. And behind all the high-stakes military strategy, there is a devastating human cost. UN monitors are now reporting that the number of displaced people in the Levant region has hit a staggering 1.5 million. This isn't just a geopolitical crisis, it's a full-blown humanitarian catastrophe. Now, you've probably heard about the US Navy blockade of Iranian ports. So what's the thinking here? Well, it's all about neutralizing what's called littoral defense. Think smaller, faster boats, sea mines, and coastal anti-ship missiles. The goal of the blockade is to contain that specific threat, to try and stop this thing from exploding into a much, much wider war. Of course, in our totally interconnected world, a crisis like this never stays in one place for long. The conflict is already sending powerful shockwaves through the global economy, and the latest World Economic Outlook from the IMF, well, it paints a pretty grim picture. So here it is. The IMF has officially downgraded its global growth projection for 2026 to just 3.1%. And they're not mincing words about why. They're pointing directly at the weaponization of maritime choke points. When you clog these critical arteries of global trade, the whole system just starts to seize up. And when the system seizes up, what happens? Costs go up for everybody. Global inflation is now projected to hit 4.4%. And this isn't complicated, it's being driven almost entirely by stubbornly high energy costs, coming directly out of this conflict. This isn't some abstract number. This is hitting people's wallets hard. But what's really fascinating here is how this pain is not being felt equally. Look at this chart. The US economy, for now, seems relatively resilient. It's still projected to grow. But for the huge manufacturing economies in Europe and East Asia, it's a different story. The one-two punch of high energy prices and broken supply chains is pushing them right to the brink of recession. So, with the real economy showing cracks, it's no surprise that financial markets are going on high alert. You can just feel the anxiety as investors are trying to figure out what a long-term wartime economy actually looks like. A great place to look for fear is in the debt markets. The yield on the 10-year US Treasury note, sort of the benchmark for the whole world, is stuck at a high 4.3%. That's a huge red flag for investor anxiety. And this is all happening while the total global debt burden has ballooned to over 315 times trillion dollars. The pressure on governments is just immense. So what's the response on Wall Street? It's a classic defensive crouch. Money is pouring into safe sectors like aerospace and defense. All those bets on the Fed cutting interest rates this year, they're completely off the table. And we're seeing real signs of stress in places like the private credit market, where some funds are actually stopping people from pulling their money out. But here's where the story takes a fascinating turn. While almost everyone else is running for cover, one sector is making an incredibly bold strategic move. In the middle of all this chaos, big tech isn't just trying to survive, it's making a play to secure its own future, completely separate from the rest of the world's problems. Just look at this number. The biggest tech companies are planning to spend $650 billion in 2026. That is a 71% increase from the year before. This isn't just investment, it's a massive land grab for the next generation AI hardware that will power, well, everything. But there's a huge bottleneck. All those new AI chips need a truly mind-boggling amount of electricity. We're talking 96 gigawatts of power needed for AI data centers by the end of the year. The industry has run smack into a physical power ceiling. You literally can't just plug this future into the existing grid. Which brings us to their radical solution. The tech giants see this power crisis coming, so they're bypassing the grid entirely. They've started to directly fund and build their own small modular nuclear reactors, or SMRs. The goal? To create their own private, stable, and massive power source, effectively decoupling their future from the volatile global energy markets that are causing chaos for everyone else. So when you put all these pieces together, the conflict, the economic fallout, big tech's energy play, it all points to one enormous conclusion. Our global supply chains are being permanently rewired. What's happening in the Strait of Hormuz and the Red Sea isn't just a temporary headache, it is a fundamental break from the past. I mean, this chart says it all. A staggering 72% of the shipping that used to go through those key waterways has now been permanently rerouted. This is not a detour, people. This is a new map for global trade being drawn right before our eyes.
And that new map has very real consequences. Going all the way around Africa adds up to 2 full weeks to a voyage. That single change effectively takes about 10% of the world's entire shipping capacity offline. Add to that the fact that you can't even get insurance for the Persian Gulf anymore, and the old routes are basically gone for good.
So what this really represents is the end of an entire philosophy of how the world works. For decades, we lived in a just-in-time world built on cheap, fast, predictable shipping. That's over. We are now in a just-in-case world, a world that values resilience and safety far more than pure efficiency, and that world is just going to be more expensive.
And that leaves us with the biggest question of all. The era of hyper-efficient, just-in-time globalization seems to be well and truly over. So as we all learn to navigate this new, permanently rewired world, a world with new choke points, new supply chains, and new power players, you have to ask, who are going to be the winners and who will be the losers?